What's up, everybody? This is Jimmy with Trading Decoded. It is 3:39 in the afternoon, and it is, October 14th, 2024. Market is still open. Jerome Powell is probably still yapping. And yes, at 3 o'clock, we have the Jerome Powell effect. I don't know if he's still talking or not. At 3 o'clock, I have to go pick up my kids, and we agreed to be done for the day. Why, you ask? Well, the reason is because we found beautiful trade in the morning that most people took advantage of, and for a long time, I say a long time, probably about 20 minutes, the first 20, 30 minutes of the day, we had nothing but green books in our poll, which is fantastic. This morning's drop was a lot bigger than what we expected. It's obviously as big as we hoped it would be, but these days, what we hope for is very often not what we get, right? Especially if we're aiming a little bit higher than normal. I'm going to explain to you guys what I saw, what I liked, why I recommended or talked about the trade. I can't recommend trades, or suggested the trade that I was interested in taking, and what I needed to see in order for that to be different. Meaning, I was looking for puts because in the beginning we were trending down into the open. CPI numbers came in hotter than expected. And I'm not opposed to calls in this situation. I just needed to get above very specific levels in order to justify them. We never got above those levels throughout the day at all, as a matter of fact. So calls were not a thing I was interested in. But let's go ahead and talk about what we saw and what we took. When I say we, I mean the majority of the community. 8:30 this morning, we got our CPI wholesale numbers, or whatever it was. Wasn't great, okay? Not catastrophic, but a little bit hotter than expected. That caused us to move down relatively sharply at 8:30. But that's when I started to draw my levels. So as you could see here, I had a pre-market high. I know it's not the high. The high is actually somewhere around this orange line, a little bit above. But that's not what I look for. When I do my charting at 8:30, I'm looking for the most recent levels of support and resistance around that time. And that's what I go by, right? I'm looking for the more and most recent information to come up with these levels. The reason these levels are important is all I'm doing, guys, is trying to figure out where the buyers and the sellers are disagreeing on price. That's all support and resistance is. Because if you know where those levels exist, then you can be prepared to enter the fight, or you can be prepared to get out of your trade before you enter the fight. The only reason support and resistance works, or it matters to me, is not because I know that it's going to hold or that it's not going to hold. It's because I know that if I'm in calls and I'm coming up to a level where the last time we were there, we had resistance from buyers, and I might say, I'm going to take the calls up to that area, and I'm going to have enough money to be happy by the time I get there. I don't really care to deal with the fight itself. I'm getting old, guys. The days of me getting into fights are long gone, right? And only taken when necessary. That's all we're doing, just in a chart form. Okay? No, not every time do we make it to these lines exactly, but it's undeniable that most of the times these lines act as areas of problem. And there are ways to tell whether it's more or less likely to be a problem, which is what we're using for additional confirmation or confluence by watching ADD and the cues. You understand? Okay, so yes, I am aware this is not the exact pre-market high. It's not the exact pre-market low. I'm aware of all that. But it is a level of support and resistance that exists post reports leading into the open. That's what I care about. Okay? Now, our call line was a breach above this resistance area right here, 597.48. Now, we knew that above that line, the next resistance you're going to run into is this blue line, right? So if you choose to play the space between line A, making it to line B, that's about a 30-cent move, okay? If you want to take advantage of that or attempt to trade that, that's on you. I wasn't even ready this morning going into the open. I thought we had 2 or 3 more minutes before we were going to open, so I missed this. But once we got there, I saw how well we reject. I looked left and said, last time we were here, we rejected. And more importantly, Qs were near a double line of resistance. Okay? So my criteria before the market even opened for calls, I told everybody, I want SPY above this line. Number 1, breaking resistance, and we got to make sure Qs are not at a resistance if we're going to take calls. Once we pulled back from this tight area of double resistance here, we pulled back, we found support. We came right back up. But what's different this time than this time is this chart. In the very early morning, when I say early, it's still early at the time we did take our trade, ADD was moving up. And I said to everybody, guys, take note of the fact that these ADD candles are getting much slower, much smaller, and much more wicky on the top. So if you're in calls, take note of that. That means there's selling pressure in the market. Qs were struggling at a resistance line. Okay, we didn't jump into puts early. We waited. We got back up here, and at 9:33, following this big wick on the Qs, on the ADD, and the rejection up here on SPY, I said to everybody, I said, guys, if you're aggressive and you're looking for a potential put entry, near that blue line is going to be a good opportunity to take it. Why? Well, number 1, we had resistance here in pre-market that held. Number 2, we have resistance still from pre-market that's holding. 3, we're wicking, touching resistance here. 4, ADD had already started to rotate down. 5, the Qs were at a resistance they were struggling to get through. And we knew that if either one of these charts closed above the blue line here or got above this double resistance here, we were going to have to stop out of the trade. Now, I got in 1 minute later. I got in at 9:36. Okay? Several people got into this trade way before that. Now, I do want to point out that our put line was all the way down here. Now, again, I draw these lines 5 minutes before open. So that line was there before this move started to come up. Otherwise, I would have moved the put line. It would have been here. Okay. Then I would be looking for a break of this support. The problem then would have been you wouldn't have had enough room to make any money if it stopped at the next support. However, if we get through this support, the next one down is this yellow line. Okay. That is plenty of room to make some money. It's about a 40-cent drop. Now, again, guys, I know 40 cents is not a big deal, but we're using leverage, which allows 40 cents to pay you. Okay. A 40-cent move is close to a 20%, 18 to 20% return on your investment when you're trading options near one strike out of or in the money. Okay. You're talking about moves that very often happen in a minute or slightly more than. Okay. We rarely have to hold on to these trades for a long period of time. I tell people all the time, the trading that we do is not glamorous in that you're making a ton of money. Okay. The beauty in the way we trade or scalp or whatever you want to call this style of trading, we were actually talking about that today. What type of trading? What would we call my trading? For me, I guess it could be a form of scalping, but I'm using technical reasoning to enter and exit my trades, right? So for puts, I'd like to be trending down or at a resistance level, struggling clearly. I'd like to see things in momentum in my favor, right? And I'd like to believe that we're going to move down to the next support. That's it. It's not complicated. Now, all that matters to me is there enough room between the entry line and the next support down, if I'm in puts, to make the trade worth the risk? You see, I'm using the power of leverage to mitigate what I consider to be risk, which is time in the market. You're very rarely going to find me holding on to trades for hours or even 10, 15, 20 minutes. It happens sometimes, but I'm looking for that quick in and out. Why? Because all too often you'll be in a chart. Today was not one of those charts where we're moving comfortably in a very consistent direction, only to have a big fake out go against you. It happens all the time. And I know if you're day trading, you've been on the receiving end of those plenty of times if you hold your trades for too long, myself included. So to avoid that, maybe I'm a wimp, maybe I'm a wuss. But to avoid that from happening, and it's impossible to completely avoid it, but I try and mitigate the time that I'm spending in these trades so I have less of a chance of running into that situation. Okay, that's why I trade the way I do. I've allowed the leverage, the position size that I'm trading, for me to take advantage of that short move, but while affording me the ability to pay my bills. Okay. Furthermore, because of the law, the rules and everything that I use for my trades, 20-cent minimum, I'm playing 5 contracts at a time. That typically yields me $100 in profit per contract. With that $100, I multiply it by the 5 contracts. Now I'm making $500 in these trades. Okay. Many times more than that, I am trading first strike out of the money SPX contracts. SPY contracts return the same percentages, but the cost of those contracts are a lot cheaper. So the dollar amounts are different. Okay. But the moves are the same. I'm just using more leverage. I don't suggest you start with SPX. I think that if you're trading SPY contracts, especially multiple, 8 or more is the minimum I would suggest before you get into a single SPX contract, because one SPX contract is equivalent to 10 SPY contracts. What you don't want to do is jump from a couple of SPY contracts up to one SPX or a couple SPX contracts. It moves way too fast for what you're used to. It will freak you out and you will do irrational things because price will be moving in an irrational manner as far as your brain is concerned. Okay, you have to work your way up to that. But once you do, that's where the real beauty of this style of trading comes into play. Okay, we have a ton of people in our community that have gone from losing traders to break even to now very profitable traders trading this way with these levels, albeit some of them are using futures. Okay, because these levels work perfectly as futures trading. Some people are trading the Qs and the levels I provide on that. Again, the methodology that we're using works on all types of stocks and commodities and trading. We just use SPY, or I use SPY because, well, it has SPX, which is my bread and butter. But long and short of it is, we recognize that we were at a very strong resistance level up here. ADD started to trend down. Qs were at resistance. We took a risk. We jumped into this trade at 936. We were originally aiming for our put line. That's why there's an alert there. We got that there at 939. So in 3 minutes, we made a drop from 597.73 down to 596.74, almost a full dollar drop in 3 minutes. That was amazing. Several people took their profits there. The reason I did not, and I tried to help people stay in this trade, was because take a look at ADD. At 936, we were up here struggling to move higher and got a nice big red candle, and it free fell all the way through 939. I said, guys, ADD still moving down aggressively. I'm going to let this thing ride a little bit. Okay. What I'm hoping for is that we can get down to this double line, right? 595.85. We had a futures line there and a line of support and resistance on SPY, and we were coming down to a level of support on the Qs. I ended up putting in a stop loss on this candle and got stopped out at 945. That ended up being a 109.3% return. This was a beautiful trade. Now, we also had people wait until the put line got breached, which was done here where this white arrow is. I should have put an arrow up there. Sorry about that. Okay. If you took that trade, you got almost a 50% return. if you took it just to the line, that was a 30% return in 1 minute. The point is, guys, we were trending down. We had momentum in our favor. Qs were coming down, breaking supports. ADD was coming down, breaking supports. SPY was coming down. Everything looked good for the downside for the time being. So we took advantage of it. Whether you got in aggressively, conservatively, or you got out conservatively or aggressively, either way, the opportunity to make money based on sound reasoning existed at that moment. Now, a lot of people want to know, how did you know to get in up there at the top? Guys, you don't know. You'll never know. It could have very easily held up here and broke resistance and stopped us out for a loss. I don't know. Nobody knows. But what I do know is where all the things that I watch all the time for these trades is struggling to move higher. That's telling me, hey, every trade involves risk. Maybe take the risk of believing that this resistance is going to hold like it did here, like it did here, like it did here, here, and here. Guys, there's so much resistance there, it almost seems like it's crazy to not at least consider respecting it enough to enter a put trade, even if it's to come down to this line of support. The beautiful part about this was it did exactly that. Even if you took your profit at this line of support, you still made money. But if you started to pay attention to the fact that the rest of the market, small caps for this matter, was selling off, that could have helped you justify staying in the trade longer. This is what we do all day. This is all we're looking at. These three charts that you see right here on this screen is all I am looking at to come up with these trade ideas. They don't always work. And there are plenty of trade opportunities that we see that we don't take, or we're busy talking about something else and we don't point them out. But the fact of the matter is, when you just follow some of these rules, it works. Okay? And that's the point of these videos. It's not for YouTube views. I don't get paid shit from YouTube. It's a waste of time as far as that's concerned. But the fact of the matter is, I genuinely want to help you become a better trader. I don't care if you're a member of my community. This information is more for my own personal journaling, number one. Number two, it is helpful to the people in my community because they will like to come watch these videos at the end of the day, even though a whole bunch of them are listening to me in real time throughout the day. But for those of you who are not in my community, I still want to help you. I believe that the information in these videos is very, very useful no matter what strategy you're trading, what commodity, what stock, what you're doing. Because support and resistance matters in any chart, ever. And all we're looking for is confluence to help you make better trading decisions. Okay? Now, we do mosey on down. We keep moving down, lower highs, bad for calls. We don't want to get into calls until you break a downtrend, all this, that, and the other thing. But I want to show you something here. Somebody was asking me, Jimmy, would you buy puts at resistance here at 1022? Because at 1022, the Qs were nearing a resistance here. And I said, sure, we're hoping old support holds as resistance, all right, whether it's this line here or this over here, whatever you're looking at, or even this orange line. So, but the one thing you got to look out for, right? And so what was happening at 1022? Because we had recognized this. I said, guys, what do you notice about ADD? ADD, the candles are getting smaller, smaller, smaller. We're starting to see wicks on the bottom, okay? And then the pace at which we were selling off abruptly stopped. Started to move more sideways, right? So now we're worried, okay, now is ADD starting to round off and maybe it's going to make a move to the north, up, okay? Here's the thing. We were moving down on the Qs, and at 1022, some people bought puts here. I told everybody on this candle, while this was still printing, 1025, I said, guys, if you're in puts, This is looking like it might turn into a higher low. If you're in your puts and that ends up closing green, taking out this candle to the left, i.e. effectively making a higher low, I would consider getting out of those puts before it gets painful. Okay? So when that solidified itself as a higher low by closing this candle, engulfing over this one, there's two opportunities here. For the put holders, that's your chance to get out at break even, maybe a small profit if you got in up here, or a small loss. But an opportunity to get out before it became problematic, either way. For somebody who was not in a trade, but interested in potentially taking a counter trend trade, what do we always say? Higher lows are bad for puts. Why? Because that means the buyers are getting stronger, not weaker. If the buyer, and I said this before we even got back up there, I said, if we put in a higher low and we make it back up to that double top resistance, I would not buy puts there. In fact, we're more likely to break that resistance because of the higher low than we are to respect it. So on that same candle that should have stopped you out of your puts, some folks might have taken the opportunity to get into calls. Now, others may have waited for a break of that resistance, which would have gotten you in 2 minutes later. But all you're looking for is where is the next resistance up from there? Here, up here, in this area. Okay, so higher lows. We're looking to break resistance. If we break that resistance, we should head up to the next resistance. Whether you use the line, the wick, these guys, I was aiming for up here, 511.11. Okay, that was not in this trade. We got close to it on this candle. Yes, we pulled back. We came back. We retested support. Then we made it up there. So whatever the case was, if you were in puts, you had the opportunity to get out before it got painful. If you were looking for calls, you had the opportunity to get in while it was going to be profitable. Do you know it's going to be profitable? No. But these are just the rules and the things we're looking for. Point is, we were able to see that for the puts, it was getting bad. For the calls, it was looking better. That's all. You don't have to take calls, but if you're in puts, you should consider getting out of them. Right? And if you're not in puts and you want to take calls, maybe this is the opportunity you're looking for. Because look at the move from line to line, resistance to resistance, and then some. Okay? And after that, we kind of just slowed down and chopped into eternity. And then I went to lunch. And then we found, actually, I didn't go to lunch till almost 12:30 today. I take that back. We were talking about politics. Yeah, it's everybody's favorite subject during this move down. And a lot of people weren't yelling at me because, well, they had already made their money. But in this trade right here, this is the last one we talked about, and it ended up being a very quick but beautiful move to the downside. I'll tell you exactly what we were looking for. We were chopping down, putting in lower highs, and somebody was asking me, Jimmy, would you buy calls down here? I said, no, but if we break below that pink line, I do think that we're going to move down to at least 509.22, but I would love to see Qs down to 508.40. Now, we didn't get to 508.40, but we did definitely made it to 509.22, and if you just waited for the close below the pink line, well, that would have gotten you in at 12:30. And if you played it down to the Qs making it to that line, that would have gotten you out at 12:32. So in 2 minutes, you dropped about 35 to 40 cents. I'm sorry. No, you dropped more than that, 70 cents, 80 cents almost. 80-cent drop in 2 minutes. Guys, that pays a fair amount of money in a short period of time. That's exactly what you want. That's what you want. Okay? After that, I went to Sonic to eat a disgusting lunch. It's one of those that it's good, but oh so bad. But I wanted a hot dog for lunch, and my favorite place was closed today, so I had to go settle for Sonic hot dog. I'll regret that and pay for that later. But either way, that was the last trade we talked about, and then I came back around 2 o'clock, which was around here. And that's it. And then Jerome Powell came in at 3 and dropped us, and then we just started to do crazy things. But I don't trade this late in the day, so there's really no point in talking about the chart after the time we leave for the day. But that's pretty much it, guys. I know that I do these videos. I know a lot of you like them. I know a lot of you roll your eyes and say, God, this guy says the same shit all day long. You're absolutely right. That's part of the reason that I have a hard time making them every day. I'm aware of that. But not every chart's the same. I also am aware of that. I do have a fair amount of people that do gain value from these videos. If you're that person, please know that I am happy that they help you. It's the reason that I do continue to do them, even though I don't feel like they're very helpful. The fact that you let me know that they are is what motivates me to continue to do them. I'm getting burnt out. I look at charts. I talk about charts all day, every day. It's exhausting. Okay, it's exhausting. It's how I make my living, right? Trading is how I make my living, but I make my money personally in the first hour. It basically, I'm usually done within the first 30 minutes of market open. Staying here later than that for the benefit of others is what these folks pay me for in the Discord community. It's not for me anymore at that point. After 12 o'clock, I personally don't trade, and I don't think the market is conducive for trading the way that we do. So after 12 o'clock, when I come back from lunch, you're very rarely going to see entry and exit suggestions, simply because it's not price action that changes so much. It's the underlying factors that make what works in the morning no longer work in the afternoon. Lack of volume, lack of volatility, more support and resistance levels, and increased theta. Okay, I do not agree with the idea that it is easier and better to trade later in the day. Now, don't get me wrong. There are people who make an absolute killing later in the day. I'm not that guy. My win rate drops significantly in the afternoon, which is why I chose to stop trading in the afternoon personally. It was destroying my win rate. Okay? It's not that it can't be done. It's just that I'm not good at it. And so I don't feel like I'm giving anybody any value or benefit by continuing to be on a microphone in front of these charts in the second half of the day. I can't help you there because I don't have faith in that what I'm telling you, it works. I know it doesn't. It doesn't work well. I've learned that through my own trading. Okay, so please understand. I know I sound like I'm bitching, but for those of you who are in my community, you already know where I stand because we have this discussion all the time. In fact, we're going to be putting a vote up in the community. This is for the people who don't trade with me in my room. You might be in another room. I'm putting a vote up the week between Christmas and New Year's. I take that week off. And I'm going to ask you guys how you feel about me shutting my room down, or at least getting off the microphone at 12 o'clock Eastern every day. And in return, I will be lowering the monthly cost of the Discord. Okay? It's not going to be as cheap as being an annual member, but it's going to be $45 cheaper than what you're already paying. So even though I don't provide you any additional benefit after 12 o'clock, as far as trades go, you're not going to lose anything on that end. In fact, you're just going to lose my beautiful radio voice after 12 o'clock, but it's also going to provide me the ability to do this for the 5 years that I promised you guys I was gonna. Okay? So with that said, I hope you guys found some useful information in this video. If you did, please like, share, and subscribe. If you are at all interested in whether the shit that I'm telling you guys in these videos is what goes on in our room, feel free to jump in the Discord. It costs you nothing, okay? Even if you don't become a paying member, I hope that I'm able to give you some bit of information that helps you maybe understand something you were not sure of. Maybe it helps you find the one thing that is preventing you from being comfortable in the trades that you're already taking. Okay, whether you become a paying member or not, if you do, I appreciate that. But if you don't, and you spend the free week there and then you decide you don't want to be a paying member, I'm okay with that too. But just come in with an open mind. Come in with the idea that I'm not trying to scam you. I'm trying to help you. Right? I figured out how to stop being broke in the stock market. I'm trying to share that information with as many people that want to listen. That's all. Okay? And then as far as you paying me for that, I feel like since I'm using time that is not benefiting me, i.e. after I take my trades, to help you continue to take yours, that there's value in that. And that's why there is a cost associated with staying in my community, even after I am done with the need for the charts. Just like you stay at work and expect to get paid for every hour that you're there, I value my time. I value your time. And if you're willing to give a lot of what we teach in here a try, you will come to find that the Patreon or the Discord dues pale in comparison to what you can make once you learn and get comfortable with this system. But don't take it from me. Ask the people who are paying members in my community. I don't tell them what to say. You can ask them whatever they want. They'll tell you. They'll tell you. They'll tell you the truth, whether they like it or not. All right? With that said, thank you guys for watching. Jump in the community if you want to try it out. If not, continue to watch these videos. They don't cost you anything. And let me know. Let me know if some of these things are working for you, even if you don't trade with us. I'd be interested in knowing that. All right? And that's it. I hope you all did as well as the rest of us did today. And I look forward to seeing you guys tomorrow. Thanks for watching. Till tomorrow. I love you guys. See you.